The numbers are in. The numbers on an amazing 2021. These are the numbers of the transactions that took place in the Las Vegas Valley single-family residential resale during 2021. And the numbers are impressive, and they are in some manner a little bit disconcerting as well. And so let's go ahead and take a look at what we have here. I am Justin Miller with the Chong Miller Group. We help people buy and sell homes. We help people maximize the value of their properties. All right. In December of 2021, the median sale price for single-family resale residential, $425,000. That's up. It's up 1.9% from November's $417,000. It's a record price, and it is the 10th record high month in 2021. So January had not been a record high. It had been tied with December of 2020 at $340,000. We're up 25% from the beginning of 2021 through the end of 2021. And 10 of those months, we achieved record high pricing. And by the way, that price gain, $85,000, that doesn't even represent the full gain that was available to homeowners. Since, despite the rumor, most people buy their houses on a mortgage, not with cash. And if you had a mortgage, if you took out a mortgage at the beginning of 2021, a really low interest rate, like 3%, maybe a little bit below 3%. And what that means is that unlike with a high interest rate mortgage where you're paying a whole lot of interest in the first months before you start to pay down any of the principal balance, with low interest rate mortgage, there's not so much accumulated interest that it can all be front loaded and you're not paying anything on your principal. In fact, your payments go toward principal at a higher rate earlier in the mortgage than they would be with a high interest rate loan. So you would have been saving at the median about $800 as principal reduction per month. So if you had an $85,000 price appreciation and you were saving $800 per month in terms of equity gain by paying down the principal balance on your loan, or about $10,000 over the course of the year, you would have gained $95,000 in net worth during the course of the year if you'd bought at the median on January 1st of 2021 relative to where you ended 2021 on December 31st. And wait, there's more. There's tax benefits to owning property because you can write off the mortgage interest on your principal residence, on your primary residence. And so you would have actually experienced a gain equivalent to approximately $100,000 by being a homeowner at the beginning of 2021 relative to where you'd end 2021. Now, if you owned previously, right, you already were in the market, you'd bought a house in 2019, you experienced the same kind of gain. If you were a renter and decided you were concerned about the market and you held off buying and decided not to buy, you wanted to wait until maybe prices would go down, you lost out on $100,000 of net worth. That's a lot of money to lose out on. Now, if you're going around YouTube listening to all the various people out there, if you're reading the newspapers, reading all the various people out there, if you're listening to people on TV talking about what they think is going to happen in the real estate market, most of the commentary out there is coming from people who are not actually market participants. They're people who want to be heard saying the things that they want to be heard saying. But listen to people who are out there every day dealing with buyers, sellers, and property. Hi, I'm Justin Miller, and we are the Chong Miller Group. At the Chong Miller Group, we help people buy and sell homes, and we specialize in helping you, our clients. If you're not yet one of our clients, reach out to us. Give us a call, send us an email. Let's see what we can do for you. And now back to the show for 2022. We're going to see continued price gains. We're going to see continued sales volume gains. Pay attention to who you're listening to, because there's a lot of bad information out there from people who just want to be heard saying things. All right, so that's the price gain. $340,000 to $425,000 during the course of 2021. Now, during this past year, I've reported most months on price per foot. It's another way to think about the valuation in the market. And I've commented, and I'll comment again here as a caution, houses in Las Vegas do not sell on a constant price per foot basis. In some markets they may, but that's not the case here in Las Vegas. But price per foot is an interesting indicator because it shows us something about what's going on inside the data in the market. If price per foot starts to change at a dramatically different rate than median sales price, it tells us that the types of property that are selling are skewing higher or lower. Well, price per foot in December was $231. That's kind of interesting because it's actually down. It's down from 232 or 0.4% from November. Remember, our median sales price was higher by 1.9% in December relative to November. But the average price per foot was lower in December than in November, suggests that some of the activity that had been taking place higher in the market space had maybe dissipated a little bit in December, and some of the activity was taking place in a more typical or in a lower standard than typical in the market in December. But overall, price per foot up $49 for the year, from 182 to the 231, and that's up 26.9%, as opposed to 25% for overall median price. So a little bit of a skewing during the course of the year toward higher end properties, but we saw some level of mitigation of that in December. Say in every one of my videos, the price doesn't matter if nothing's selling. Did anything sell? Yes. December was a phenomenal month. December historically is one of the slower months for sales. That's just the reality of the situation, because people around Thanksgiving stop going into contract, don't want to move during the holidays. January is actually the slowest month of the year for resales. And it's because people are not looking in December, they're not going into a contract in December, and so they're not closing on their purchase in January. Now, it's not the market stalls entirely. There's definitely activity that takes place. But so December activity is slower, and January sales closings then really reflect that with lowest numbers. So how did December sales look for 2021? 3,070 sales concluded for single family, resale, residential in the Las Vegas Valley in December of 2021. Now, that was down. It was down 2.9% from the 3,161 that had closed in November. Kind of interestingly, there were only 3 months that were lower in 2021 than what we saw in December. And so that suggests in some manner that December was weak, except if we look at all of 2021, we see something that actually suggests a really different piece of information. So 3,070 closed sales in December of 2021. That was also down 1.9% from the 3,180 that closed in December of 2020. Now remember, 2020 was a very unusual year. The economy was largely closed for a couple months. December of 2020 was actually the strongest month in all of 2020. And 2020 in the aggregate was a strong year, came in almost identically in terms of total sales during the year to 2019, which had been considered at that time a strong year. So we're down for December 1.9% from the strongest month of 2020, December of 2020. Now, how strong was December of 2020? It was the strongest December in the Las Vegas Valley's history. So that December sales were down a little bit, as we would expect seasonally, inconsequential, down actually only 60 units from what we saw in December of 2020. Again, second strongest sales number in any December ever. And we're going to talk about the year in aggregate as well. In the year in aggregate, there were 37,433 single-family resales in the Las Vegas Valley. Now, it's just a number, but that number is the highest annual number in the history of the Las Vegas Valley. And interestingly, that number is the second highest rolling 12-month number. So if we went back to 2011, we could find in May of 2011 that May of 2010 to May of 2011, that time frame, had a slightly higher number of total resales than what we had through the year of 2021. Now, why would we see, and we normally see this actually as sort of the June to June timeframe, that 12 months will have a higher rolling 12-month number than what we see December to December or January to January. Why? It's because it includes only one of the lowest number months, January, and it includes two of the highest months that we would normally see in a particular year. When we're looking at the year itself, we go from low sales at the beginning of the year, high, and then low sales at the end of the year. And so a rolling 12-month average from the middle of the year is going to generally be the highest number that you can get. We've only had one of those 12-month rolling averages higher than what we saw in the actual 12 months of 2021. So kind of an interesting thing. I want to point out, though, in 2011, when we had that rolling 12-month volume high, that corresponded in time to the lowest pricing level on single-family homes in the Las Vegas Valley from the housing price crash that happened in the financial crisis and housing crisis from 2006 through 2011. That was the bottom, the nadir of the pricing point. And the median sales price at the very bottom, which corresponded with the previous high in total number of sales, was $120,750. So when nothing is selling, you can be priced really high. When everything is selling, generally it's because things are priced low. So high demand occurs at lower prices, right? The typical supply-demand curve is you lower prices, there'll be more demand at that low price. So in 2011, at the bottom of the pricing curve, we saw, yes, a lot of institutional investors came rushing into the valley, buying up many, many, many homes, thousands, literally thousands of homes to put into their property portfolios and convert them into rental properties. And so that's what was going on in 2011. In that rolling 12 months where we actually saw a higher volume number than what we saw in 2021. What's going on in 2021? We saw the highest pricing, and I'm not just talking 1 month, like December of 2021. We actually hit record pricing in 10 months of 2021. So from February through December, right? Because January was one of those 2 months where we were even with what we'd seen in December of 2020. January 2021 was not a record price. But starting in February through December, there's only 1 month where we were not at a record high price throughout the entire year. So incredibly strong pricing and incredibly strong sales volume. And December of 2021 maintained that very strong sales volume, second strongest sales volume of any December in the history of the Las Vegas Valley. 2021 was a blowout year. All right, so what about the other numbers? Looking forward to what we might expect into the start of 2022. So we start by looking at pending home sales. Those are contracts that were written in December that more often than not are going to close the following month, so January of 2022. Pending home sales, 2,577. That's down. Remember, pending home sales usually hit their nadir, their lowest level, in December, causing actual closings in January to be at their lowest level of the year. So down 11.6% from the 2,914 that we saw in November. We're up actually 3.8% from the 2,482 pendings that we saw in December of 2020. So I want to comment that December of 2020 was the strongest month in 2020 and set us up for record pricing and record sales in 2021. And the pending home sales December 2021 are 3.8% higher than what they were at the end of 2020. So we're looking at the beginning of 22 as being a very strong year, which is in line with my forecast video. If you go back and watch the forecast video, I expect 2022 to see growth in volume sales and growth in dollar terms over 2021. And so we're actually lining up that way into the month of January. What about properties for sale? At the end of December of 2021, there were 2,628 single-family residential resales on the market. That is the standing inventory. That's what was sitting there as we closed out 2021. That's down 30.9% from what existed at the end of November. It's actually the lowest number in the digital MLS. And you may recognize I've said that a number of times as we've gone through the year of 2021. And it's because we keep plumbing the depths of these record lows in standing inventory. It's down 45.1% from the end of December 2020, from 4,789. This is a significant challenge. You remember we had low inventory in 2021. We're going to have lower inventory in 2022. Right. We're already going into 2022. We got lower inventory than we went into 2021 with. And we hit acute crisis levels of low standing inventory in 2021. That's what I'm forecasting for at least the first half of 2022. And boy, that's sure how the beginning of 2022 has started now that the data are clear. So what does it mean when you have low levels of standing inventory? It means prices are going to be going up. There's no way around that. As long as there's demand, people are looking to buy. They have to pay more to get access to the smaller inventory. And by the way, 3,070 sold, 2,628 as of December 31st for sale. So fewer for sale than what actually sold. I'm Justin Miller with the Chong Miller Group. I produce these videos to put valuable real estate information into the public domain. If you find these videos to be interesting, helpful, or have usable content, please subscribe to our YouTube channel. And as they say in the YouTube universe, please smash the like button. That way I'll know to continue to produce videos like this. Thank you, and now back to our show. What about new listing? 2,166, down 23.7% from the 2,840 that had come in at the in November of 2021. So we expect a seasonal drop-off in terms of new listings in December because people don't want to put their houses on the market during the holidays. But this exceeded what we would normally see in the seasonal slowdown. New listings down 9.9% from the 2,403 that came in December of 2020. Again, what happened in December of 2020 set us up for acute levels of low inventory in the first quarter and into the second quarter of 2021. And that's what we're seeing here. Listings are down by 45% from where we were in December of 2020, and new into market is down by 9.9%, even though pendings are down by only 1%. So how about back on market? I often report back on market because it's interesting. It's another way that things come back into inventory. There are contracts that have failed. That number for December 2020, 917, that's down. It's one of the lowest numbers we've seen all year, but it's still about 200 high from what we would be normally experiencing in a December. So it's still an elevated number. It's elevated because there are elevated numbers of bad appraisals that are taking place. There are ways to shield yourself from a bad appraisal, both as a buyer and as a seller. And if you're working with a very knowledgeable and experienced real estate agent, your agent's going to know how to shield you from those kinds of problems. But they're hard problems. And if you're working with somebody who is not so experienced, they're problems that could well eliminate the ability to move forward on your contract. And if you're trying to do this on your own, you don't have the experience. You may have done this 10 times during the course of your life. But an experienced real estate agent, we get those kinds of transactions in a month. So we're out there every day, we're seeing what's going on, and we can really help you with the process. Now, a couple other specific points I want to make. As you know, I exclude those new construction properties that made it into the MLS from what I report. And I just want to highlight again here that now we're in January of a year, why I exclude them. I exclude them because the developers have picked which particular properties they'll put into the MLS for whatever the reasons, the strategic reasons that those developers decided to put them into the MLS. That's different than the way resale properties come into the market. And so they are a distinct category of properties. They're not the same population. And so I eliminate them from the data that I report. Now, oftentimes, with the inclusion of new construction inventory that is in the MLS, the pricing levels will vary significantly. Earlier this year, we looked at a particular month and the pricing was different by $3,000. Kind of interestingly, the new construction inventory that came into the MLS in December had a median price of $479,971, so almost $480. And there were 122 of those that came in. That has the potential to move by pulling 122 properties higher than the median resale. That has the potential to move what we report as the median. Very interestingly, there is no change in December. The median price, if we're including those new construction, is $425, and if we don't include those new construction, is $425. And you might wonder, well, since those are all higher priced, they're higher priced by $55,000 approximately, how is it that 122 units that were $55,000 higher being added into the data did not change the median? It's because the median, remember, is literally the middle number. 1/2 of units sold were below the median, and 1/2 of units sold were above the median. It doesn't matter what the extremes are on either end. In fact, it doesn't matter the shape of the distribution. It only matters what that middle number is. So by being, in this instance, by looking and saying, wow, 122 additional units, all higher priced than the median, suggests actually there were a lot of transactions that took place at 425 during the course of December 2021. So it's kind of interesting, right? The middle number still stayed at a 425 price. So if we looked at the distribution, a whole lot of houses were transacting at 425 in December. Now, there's another interesting point here, though, and that is for those people who've included those new construction homes in what they report, like LVR, like the Las Vegas Realtors Association reports, and just simply parroting it out. The median sales price at the end of December 2020, including that, was $345,000, not $340,000, which means the median price, their increase that they're showing has gone from $345,000 to $425,000. So they're showing an increase of $5,000 less than what the resale market actually experienced. And so prices, according to that, went up by 24%, when in reality, resale pricing went up by 25%. So oftentimes, the inclusion of that data makes it look like the market's stronger. In this particular instance, the inclusion of that data actually makes it look like the market's a little bit weaker, just because you have to keep that data in there in all subsequent analyses of what was going on in the housing market. The resale housing market in 2021 up 25%, from a median of 340 to a median of 425, with the strongest sales numbers, sales volume in the history of the Las Vegas Valley. A stunningly strong year. Now, I do want to make one other comment, and that is, if we did not segregate the data for type of house, and we simply said everything that's in the resale category, so it includes condos and single family homes, that number would be 50,343. So there were 50,343 exchanges of residential properties that took place during the course of the year of 2021. Again, a record number. All right, so what does that mean? It means if you want to be in the property market this year, don't wait. Waiting puts you further and further behind. If prices went up by $85,000, 25%, the question to you is, did your income or did your savings go up by $85,000 that it would have made sense for you to wait? That you'd be in the same position this year as you were last year? Or do you find yourself moving behind the curve? Now, if you're a property owner and you're thinking about changing properties, your property went up, properties that you might buy went up, and so you haven't gotten behind. But if you're not owning property and you're waiting for the right time, waiting is not your friend in this kind of an environment. I'm projecting, if you look at my market forecast for 2022, I'm projecting prices are going up 12 to 15% in 2022. I project strong sales volume as well in 2022. So waiting, if you're not currently a property owner, puts you further behind because you're not gaining wealth at the same rate that you could be gaining wealth in the real estate market. It makes sense to be involved. Now, if you're a buyer, clearly there's an inventory issue out there, and finding the house for you is going to be a challenge. It's not impossible. It's absolutely not impossible. We had inventory challenges throughout 2021, and we found houses for record numbers of people. At the Chong Miller Group, we've been very successful at that. We've been very successful at finding the right properties for our clients. We've been very successful at negotiating them into the right properties. And we've been very successful at getting them through the contracts because we protected them from appraisal challenges and other challenges that may happen to a particular contract. Please reach out to us. We would love to help you if you're a buyer. And if you're a seller, please reach out to us. We have experience selling properties. We're very successful at selling properties. We've gotten multiple of our clients record pricing in their particular neighborhoods or in their particular condo buildings during 2021. And I mean record pricing ahead of what most other real estate agents have been able to get people in this market as it's been unfolding. It's because we understand what we can do to market your property in the most successful way. And we're really successful at it. Please reach out to us. We would love to help you. I am Justin Miller with the Chong Miller Group. We look forward to talking with you. We look forward to helping you with your real estate adventures.